Welcome in, everyone. This is Wealthytainment, Dan French. You guys know we're going to get right into this topic. Very interesting topic that came out. This lady comes out and she's talking about the increases year over year, 2024, for car insurance. And I'm going to say, is this legit? You know, are these companies out there, corporations and these insurance companies, is this all greed? 1912 is when car insurance really came into effect, bundling it up with other insurances. But this lady came out and emphasized the increase in cost in 2024 and how it's gone up 26% this year. Increase, inflation for people out there that are trying to buy, or not just buy, but get insurance and try to survive in a market and in a world right now where we see inflation going up on all facets. Let's get into what this lady had to say. I'm going to come back and give you guys my opinion, and we'll go from there.
Nationwide are experiencing the sharp rise into auto insurance rates. Bankrate says the average cost of full coverage car insurance is up 26% this year to about $2,500, and the rates can be much higher in certain states.
The experts we spoke to say there's a number of factors behind the increases this year. Increases in car crash fatalities, car thefts, and weather-related claims over the past few years, along with inflation driving up the cost of labor and vehicle parts. Now, Bankrate says the average annual premium is now $2,543 a year. That number can vary depending on your state, however. Massachusetts and Vermont have some of the nation's lowest rates, for example, as a percentage of their income spent. But on the flip side, in states like Louisiana and Florida, folks there are spending between $3,600 and $4,000 a year. That last one in Florida. Why so much in Florida? Bankrate analyst Shannon Martin tells me a lot of it is the weather. If you think about a flood during a hurricane, for example, one house can have 3 cars. So climate change has an impact on auto insurance rates, especially if you live in a state with increasing and more severe weather events. Also, in many states, insurance companies look at your credit score. If you have better credit, statistically, you are probably going to pay less.
Now, I want to see some of this data that they came out and stated that these increases are legit and that the data supports this cost increase year over year. Because, I mean, look, you might just have more drivers on the road, which is probably what's happening. You got population growth happening every year. Why would you not, by law of averages, have more accidents, more deaths, more things that happen? And so, again, I don't know. To me, I feel like this is greed. And, when you look at this, let's look at this chart here. Average car insurance rates by gender. You can see the breakdown here per age, per female and male. And, when you look at the report determined the annual cost for the coverage car insurance in 2024 to be $2,543 compared to 2014 in 2023 and 1771 in 2022, you can see that for someone earning an average household income of $74,000, that's 3.41% of their entire income. What contributes to some of these costs that we see going on in 2024? Well, adding a teenage driver policy, $2,878 increase, DUIs, good to poor credit, involved in car accidents, speeding tickets, so a lapse of auto insurance, which you see the DMV get involved.
A higher risk, be it because of your driving or be it because of the experience that the insurance company had in losses in your area, meaning stolen cars. You will be held responsible. Accidents of uninsured motorists being significant and the insurance companies having to bite the bullet on that.
Let's talk about possible solutions.
The device is a good idea.
Alas is referring to car monitoring devices or apps.
As long as you are within showing as a safe driver, they re-rate you and actually bring you down.
So you can see, there's thefts. These costs are going up because of materials and trying to get parts that they cannot get. And listen, I'm not going to say it's all not legit, but at the same time, for that huge or that big of an increase, I need to see some information. This is another form for me that says, are they really being greedy here? Because each state has the ability to either increase or decrease the amount of insurance that goes up. Now, what's interesting about it is that when insurance companies see that there's going to be an increase this next year, they really push for it. It happens pretty quickly. Now, if it's a decrease, that's stretched out. It seems like things just don't. And the insurance industry, car insurance, auto industry, seems like it's really slow behind inflation in general. You know, a lot of people look at, well, food has gone up. Absolutely. One good thing was, oh, well, gas has come down. It was over $5. Yeah, but if you look at the insurance part of it, that's just absorbed that cost savings. And really, you know, you go back a few years, gas has gone up significantly. So Americans out there, they need more income. We need to have income increase at the rate of what the overall costs are to survive monthly, because everything seems like it's not going down. It just keeps going up. And I'm sure all you Americans out there that are watching this video, you guys can feel me on this. I mean, we're all feeling the pinch. And so when you look at this 26 year over year, Las Vegas, 27% year over year as far as increase goes, we're number 5 in the country. Insurance has become another problem. It's another thing out there now that people have to really budget and consider. You know, I talked to a couple of reps and I said, you know, what is really the risk factor? Why are these things going up? They said, well, here in Nevada, you know, Las Vegas, it's a 24/7 town. You see increases in maybe fatalities, people being distracted, things like that. Credit score obviously plays a factor. But I'm like, come on, man, show me the data, because every time that I see these things going up, it seems like everybody just kind of follows suit. Nobody really questions. Nobody says why. You know, you got gas going up here for, you know, just gas in general for housing. And so I don't know. To me, I feel like this is another opportunity for greed to come in and corporations to really take advantage of a situation. And I get it. Cars are more expensive. It's going to cost to, you know, have them fixed. It's going to be a lot more. But, you know, you look at theft, you look at uninsured drivers, and you look at other factors of why people are contributing to this. Plus, let's not go away from this. Let's not shy away from the fact that you have attorneys out there constantly encouraging people. And I'm telling you, all attorneys in Las Vegas, you go to California, hey, you're in an injury accident, give me a call. You've had an issue, give me a call. We're going to get some money. People going in, faking the fact that they got a neck issue or some type of issue, but they're looking at that settlement going, man, I got to get some money. Well, guess what? Insurance companies are going to pass that to the people that are not doing that. And again, people just like, it's all, you know, what's in it for me? As long as I can, you know, get mine, I'm good. And to me, I think that's a bad way to live. You guys let me know. Is insurance companies really, you know, gouging more and more Americans, milking us dry? And really, is this an opportunity for them to create more greed and make more money? Or are these increases legit? Let me know. This is Wealthytainment, Dan French. We'll see you guys at the next one, because I'm out of here.